Assalamualaikum warahmatullahi wabarakatuh.
We are from Tirnad Consultant. Let me introduce ourselves. My name is Nadiavietta, and this is my friend Tiara Noviany. We will present you about the financial statement analysis from the Great Nano Company.
So, I'm going to tell you about the company profile. The Great Nano Company established 5 years ago with 5 business units, which are first, the farm that produce chili, tomato, and chabera with farming business with an area of 10 hectares. Farming period is 4 months, including June. Second, property, land and house, buying and selling business. The third is bakery which have 3 outlets in West Java. And the last one is mart, mini market located on 3 hotels in Bandung. So now it's about liquidity ratio. The current ratio is a liquidity ratio that measures the company's ability to pay its short-term obligations, or those due within 1 year. The current ratio compares all of the company's current assets to its current liabilities. From the chart, we can see that the current ratio for banana chips is higher than any other nanos, which means that the current asset can cover the company's current liabilities. Let's move to the financial leverage management ratio. The debt to equity ratio is calculated by dividing the company's total liabilities by its shareholder equity. The ratio is used to evaluate the company's financial leverage because the amount of liability must not exceed the amount of equity. From the chart, the highest equity is from the NANNO bakery. It is good because the highest equity can cover the liability.
Next, the profitability ratio. The first one is the gross profit ratio. Gross profit margin is a metric used to assess a company's business model by revealing the amount of money left over from sales after deducting the cost of goods sold. The gross profit margin is often expressed as a percentage of sales and may be called the gross margin ratio or the gross profit ratio. From the chart, we can conclude that the Nanos firm has a highest percentage of that ratio. It means that the better company's finance is in the Nanos firm. The second one is net profit ratio. Net profit ratio is a popular profitability ratio that shows relationship between net profit after tax and net sales. It is computed by dividing the net profit after tax by net sales. The higher percentage of that ratio show the company's ability to generate high profit at a certain level of sales. From the chart, we can see that the nanos firm have a highest percentage of the net profit ratio. It means that the nanos firm can generate high profit at a certain level of sales. Next, this is the chart of liability and equity. As you can see that nanos firm has a highest chart from the other, consists of the long-term liabilities, current liabilities, and equity. I think as a consultant, it is good from nano from because the highest equity can cover the any liabilities. The last, this is a chart of total asset. As you can see that the nanos firm has a highest chart again in the total asset. This is because maybe if the department of the company have the highest equity and low liability can make the chart of the total asset has higher too. This is because the this photo can relate the chart of nanos firm is highest than the other one. Next, this is the ranking of its department from the nanos company. The first is nano farm. Second is the nano banana chips, and third is nano bakery. Fourth is the nano property, and the last fifth is a nano mart. As a consultant, we use the analytical hierarchy process method from uh, for calculate that ranking, and the reason why the department has first ranking, second ranking, third ranking, has I told before in the previous scene. And yeah, I think that's all from the Tirnad consultant. Thank you for attention. Wassalamualaikum warahmatullahi wabarakatuh.